Yeah, it's no. This is something that every trader should just kind of know instinctively anyway, because it's just such common sense. But you can see it on a 15-minute chart too, in a larger degree. But on a 5-minute chart, I'll just show you real quick. I mean, you don't even need trend jumper. You don't need anything. All right. You got the spike move, right, with the blowout and volume. I mean, 500, is that a blowout? Well, in relationship to everything else. And then, consolidation, you got to expect a pullback. The trend is still up. You got the EMA, but look how far away the price is, not only from the jump line, but from the EMA. So when it comes up and can't make a new high right here, you could sell it on the break below this little swing level right there. Put your stop right here. I mean, this is indicating the high of the day possibly. And so, you have this little risk. Maybe you could even sell it when it comes up here. You could sell it here, and if it keeps going higher, you only lose a tiny amount. You put your stop a little bit above like so, and you only risk this much. But if you're right, comes up and touches, you got a sell order, and then you just hang on. And you'd be still in it. You'd be still in it all the way down to here. Why don't I do a live trade room? Isn't that what this is? Are you being funny? That's a joke, right, Eric? Stop is 86. And Trend Jumper also works quite well on time-based charts. I mean, you could look at time-based charts and derive some good stuff with Trend Jumper as well. I don't know if you'd set it the same way with 1x. I don't know if you'd have the trades, the same multipliers, but there's a certain dynamics of time-based charts. You just have to understand them. Well, I am trading real money, Eric. I'm actually in this heating oil trade, and I was in the wheat trades too. But I got it on Thinkorswim on another monitor. I just can't show everything. I mean, it's hard to trade real money and call the room unless I was just trading my own account and that's it, and you guys just following along, and if you get the trade, great. I mean, it's hard to get the trade out on time for everybody while also managing my own position. Stop goes to 76 now in heating oil because I only got 2 eyeballs, right? I mean, I got to look at what I'm doing, move my own stops, manage my own trade, and then to try to call it out on time. I mean, I guess I could do a room, could even do it in here where I just do my own trading and you guys follow along, and if you miss it, oh well, and better luck next time. There's a certain responsibility I have calling a room for everybody to try to make sure that everyone has an equal chance to get the trades. And so there's that conflict of interest. What's best for my trading versus what's best for the people in the trade room. In a way, Eric, it's kind of what I'm doing here, but I'm also trying to teach you guys at the same time. I'm trying to blend it all. And I'm, trying to work it out where I've got just enough of my own trade activity where I could at least catch the strong markets and get a few good trades a day, and that's all I really need anyway. I'm also swing trading Forex, and I can come back later in the session. 7-1 now, the stop on heating oil. Yeah. That's the thing, Stephen. I mean, that's why I'm not going to try to do crude oil with my live account while calling the trade room because, well, I would do crude oil if I wasn't trying to do anything else. If that was all I did, nothing else, I could do that, call the room. But the thing is that, why do crude oil if you could do heating oil? At this point in time, the way the markets are, I'm not married to any particular symbol. I want to go where the easiest money is. Yeah, crude oil is a big commitment. I mean, it's a great market. It makes a lot of money, and it'll continue to keep doing great. And it'll do better. It's going to make new profit levels, and it's going to zoom to new historic levels. It's just not doing it this month. But 62 now, the stop on heating oil. I have the 5-minute chart on Thinkorswim, and you're right, it tells a story. They both do. They both do. Just, you have to think in an abstract way. You got to think when you're looking at a range bar or faster tick chart, you got to imagine what this looks like on a slower time frame with fewer bars, and you just get a lot of nice red bars. You can see it in your head. Stop is still at 62. Hopefully, I'm hoping we break below 3,000 and get the mother of all trades. Stephen, it depends on your capitalization and your ability. But if you're following the success guide on the Owners Club and really doing your back testing and then getting your 25 trades in a row, and you are well capitalized, I would go with heating oil and wheat. You can go with crude oil too, just be prepared to be Iron Man sometimes. Or you can just go power of quitting one, or you can do crude oil just 30 minutes a day and nothing else, 3 trades max, but you got to test it out and expect that, it's going to be a slower build. But, I mean, I did pick those two. I am the guy that picked the same two you just mentioned, heating oil and wheat. I mean, why wouldn't I trade wheat with its 80% winning percentage? Why wouldn't I trade heating oil with the kind of moves it makes with a 2-to-1 risk-reward ratio on every trade, and that's not even counting the trailer? Mike, that's definitely something that's been on my list too. I mean, if you have a time frame that you're liking, it would be cool to put it up and follow it, because I agree. I think that the momentum bar with Trend Jumper tends to work really well when you get it right. It's just a matter of, I know that the tick counter was put up on the Owners Club, and I haven't had a chance to look at it. I don't know if that's a new one. It's nice to use the range counter. What I've been doing is putting up the SST chart with the panel on another monitor and using the range counter for my range bars. And that I've found to be really helpful, because you can anticipate when there's 2, 1, 0 ticks remaining in the range. It shows you, and then you could put your order in before the bar closes. And that's been very helpful. For example, on heating oil, there's 2 ticks left in the range right now on this bar. But you don't have a counter. You have to do it in your head, right? Look at the high, 42. Look at the low, 24, 18 ticks. So if it touches 22, that's the full 20-tick range. And so you can move your stop. You don't have to wait. You can put in your entry. You don't have to wait. Like right now, there it is. It hit 22. So the stop's going to move. You can put your stop in. And now the stop did move to 53. We've been picking up 9, 10, 11, 12 ticks at a clip with this trailer. Well, I mean, on Ninja, I don't know. And, yeah, 51's a stop. Oh, that's great. Is it available on TradeStation on the PTU? 46 now the stop. Look at pushing below 3,000. Let's keep it going. Oh, down 32 now. Move your stop down to 32. Look at that 5-minute chart, guys. Also, again, here's something that you want to pay attention to with that 50 EMA filter, but you've got the distance between the 2 EMAs. You're way above that with the price, with the jump line. So on this trade here, this would be a crossover short. You don't need the filter in that case. That's where you don't want to use the filter, and you can quickly just click over to your calculator. You could put in your entry, 2 ticks below or whatever, and you can go to use EMA filter and just quickly set it to false, and you pick up that move. That's learning how to use your tools. Stops at 32. Got 7 ticks left in the range. You could do it in your head because it's a 20-tick range bar, right? 90 to 77, 13 ticks, 7 to go. You're looking for a low of 70, and if you get to the low of 70, that tells you that your range has been, you got your 20-tick range, and then you can move your stop. Or if you're looking to place an order, you can place your order. It's nice to have the counter, but you could also do it pretty quickly in your head. Seeing as though it's only 20 ticks, it's pretty easy to figure it out. Yeah, Well, often, as is often the case, Stephen, that when you have choppy early action, the market tends to open up later in the session. And you could have a trade plan that waits. Yeah, you're definitely both. Yeah, for sure it would have. And that's why, but you see, that's also why I say with crude oil, it's important to be Iron Man and power through it. If you did trade earlier and you did get through the chop, you got to be Iron Man and keep trading if you're going to catch up. The other thing you can do, and this is kind of an interesting approach, is that you could break the day up in 60-minute or 90-minute increments and have power of quitting 1. So you treat each incremental section of the day as its own session. And win or lose, you look at each session without it being influenced by the other session. In other words, the first session might be a loser, but the second session, which is the 90-minute session later in the day, you use power of quitting 1 regardless of what happened in the earlier session. And so you chunk out different times of day with its own independent power of quitting goals. And that's an interesting approach that would minimize your risk and allow you more trades and maybe the chance to, you know, skirt the fence as far as trying to come back when you're behind, but not over trading and digging yourself too deep of a hole. Yeah, it goes through periods of time like that, Stephen. 27 now, the stop on heating oil. And as soon as you quit trading crude oil in the morning because it's too choppy, that's going to be when it starts opening up and giving you those great early trades. So, you know, the risk of chasing performance always exists because of the 2-step forward, 1-step back. Well, on crude oil yesterday, I don't know if I posted all the trades yet. I have to review it. Oh, shoot. Just hit shut. Hold on, I have to reopen it. Okay, stop on heating oil is at 27. Of course, heating oil kind of getting glued to the 3,000 level, and hopefully it's going to, the jump line will hold it for a bigger move lower. That's what I'm hoping for. Crude oil, I think, was down like 74 cents or something like that. I mean, really, on 2 positions, 74 cents. It's not that much, guys. Not if you're capitalized properly. RG, you can't if you want to get a dollar. If you want your dollar amount, if you're just tracking points and that's it, just raw points, and you don't care about dollar to dollar, you know, I don't know. I mean, what you could do is you could do like 5 fairly equivalent Forex pairs on the same chart, and you could use the trade setup label to label each one of the pairs. Instead of labeling trade types, you label each pair. But you got to try to get 5 pairs where the pip value is fairly close so that you get a pretty good estimate on your dollars. Does that make sense? 21, the stop on heating oil. This could be all she wrote. Hopefully it hangs on. Yeah, no, it's very hard. I mean, especially if you fall behind and you're trying to do different markets. I mean, with Forex, I mean, you know, I'll just go through on a weekend and I'll just try to play catch up on a Saturday morning. You know, I get up at 4 in the morning like I'm used to and try to do it while everyone's still sleeping. Or, you know, like Dave wants to know what the damage was on crude oil. Well, that assumes I had the time to actually go ahead and put in all the trades from yesterday. And there were quite a few. 1, 2, 3, 4, 5, 6, 7, 8, 9 trades yesterday is what I ended up getting. Were there more after that? Maybe. Minus 78 cents is what I got. Yeah, crazy, but you know what? That's on 2 positions. So if you're trading 2 positions with $10,000, you're kind of blowing it before you even started. You're undercapitalized. Yeah, I mean, you say ouch, and that is an ouch, so don't put yourself in the position to get ouched. Trade crude oil with 30,000, you know, which is the rational thing to do. Between 10 to 15,000, 15 being better. Only because, or now here's the caveat. do some back testing and come up with a less robust trade plan where you're just trading less and get there slower. In other words, just trade for the first 30 minutes and that's it. And minimize your drawdown risk. Don't be Iron Man and trade straight through the session. If you know, the results are really good straight through the session, but not if you don't have the capital to handle the drawdown. The average losing trade per position is $131. So it's $262 with 2 positions. So do the math. How much capital do you need? Well, the thing with heating oil, again, you got to be adequately capitalized for sure. But heating oil just, you know, you guys, do you remember the expectation table on the UTA Pro version? You guys familiar with that? By the way, heating oil just finished at 21. Does everyone remember the expectation table? The reason why I ask is because the expectation table really tells a story. And heating oil is one of those rare trade plans that puts you deep in the green. And that's not easy to come by. You got, and also your average win over average loss is stupendous. So you draw the line from that up to your winning percentage, and you are deep inside the green. I mean, that should make your eyes pop out of your head. We have been making a ton of money with trade plans that are firmly placed in the yellow over a long period of time, and quite happy with it. Finding anything deep in the yellow is a prize to be treasured. So imagine what something this deep in the green zone is. Don't tell anybody. This is the mother lode. So, I mean, end of story. Equity curve. The equity curve reflects it. Well, RG, you have to have the pro version. This is a pro. You know, you got the basic version. That's free. This one costs a little money. It's worth it because you get all these cool little studies like your stability graphs, and you get these histograms that show you where your trades are. This shows you along the bottom here, these are the amount of points or ticks that you're winning or losing, and it shows you the percentage of your trades that land in this range of points. So 27% of these trades are, between 36 and 43 ticks. And then you have these outliers. Look at all these outliers, a lot of them. A lot of outliers on the positive side. Now look over on the negative side. 1/3 of your trades are losing 20 ticks, between 20 and 27 ticks. That's it. All the rest are way over here. Yeah, Javier, it's possible what you say is a good idea to spread your money around, but the point is, what happens when you don't have enough in your account to take the next trade? RG, are you referring to UTA? Because again, there's the pro version and the basic version, the light version. Well, if you have the pro version, then you're going to have all the money management stuff. You're going to have your trade distribution tab. You're going to look in trade performance, and you're going to have stability graphs over here on the right. These are really important. These are excellent. You want to learn how to use these 3 graphs. Very important. I think it is. I think it's UTA Lite, isn't it? Oh, you'd have the expectation table and the equity curve tabs. I mean, if you started with these with heating oil on November 5th, and you put 2% risk per position based on the average losing trade, the average losing trade is only $100 per position, so $200 with 2 positions. And you put on 2% risk, and you started with 20 grand. With maybe 10 contracts is too much. Let's just go with a 4 contract per position cap, for example. Where would we be today? Let me set the rows right. 294. This is why Money management is so important. Let's just see where this would have ended up. We all know that it would have made, well, we'll see what it would make with just 2 positions versus some money management, maybe trading as high as 4 contracts per position. Give it a chance to populate here. This is what pushes your risk per trade down. When you cap your contracts, then you hit your maximum and keep trading at the maximum. Your account keeps going up, but your position size levels out. All of a sudden, your risk per trade goes down, 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 down. Pretty soon, you're putting 1/10 of 1% risk on every trade, type of thing. Yeah, I don't know what a PFG account is. You know, I mean, clearly you got to jump through hoops to get set up to trade what you want to trade and the way you want to trade it. That's just part of the business. Those are just business decisions. Only you can make those decisions. But here's a single, again, starting with $20,000, you would have traded up to $35,400. This is after trade costs. Maybe I need a little more. I got $18. Maybe it needs to be a little higher. But sometimes you get positive slippage, so I just assume $18 per trade in trade costs. You can make it 20 or 22 or whatever. Since November 5th, you would have grown your account by 15 grand. But if you traded up to the 4 contracts, maybe your slippage is a little greater. But instead of 35 grand, you'd have $81,000. This is since November 5th. What's the date? I mean, literally, November to December, December to January, 2.5 months, $81,000. I'll tell you what's really interesting too. You see where it says percentage of trades in drawdown episode? You see where it says that? The stupid autosave thing is going, so I got to wait for that to finish. You know, this is an amazing number. If 2/3 of your trades are in drawdown, does that sound like an alarming number? It's alarming on the positive side, because what that says is that 1/3 of your trades, 1 out of every 3, 1 out of every 3 is making a new equity high. Every 3rd trade is making a new record high in equity. Scratch your head and contemplate that for a few minutes. 1/3. Every 3rd trade you take makes a new record profit level. Are you kidding me? I mean, you know, the winning percentage has gone down a little. It was up at 70%. Now it's down to 65. I assume it's going to go up again. This number doesn't matter. This number matters. This number matters. This number matters. This number matters. These numbers matter. All right, so here's wheat. Let's just compare. Look at that winning percentage. But look at the average win to average loss. Not quite as favorable as heating oil. So you get more on this side, less on this side. That's a fair trade. That's a fair trade. Stat for stat. Heating oil gives you way more on this one, less on this one. Wheat gives you more on this one, less on this one. This is still very good. This is very good. Drawdown hardly any. Look how stable the winning percentage has been. It's not up, down, up. No, it's just stable. Stable, stable, stable. So let's see. If we were to come over to here, apply this to the average losing trade, go with 2%, cap it at 6 contracts per position. Let's start with $12,000. If you're doing 2 positions, you know, you want to be adequately capitalized. 2%. So after trade costs, which I'm giving, you know, 1 tick slippage, which is a lot, $12.50 plus commission, 12,000 would have grown to 16,500 since the same time, November 5th. Doesn't seem like a lot, but considering you're only trading 2 minutes a day sometimes, run the equity curve. Let's see, that's set to, let me just double check the range. 244. Let's change that to 244. Oh, tick below 80% a little momentarily. The average loss per trade went down a tiny bit. Let's change that. And let's go ahead and give it a whirl and see how this one would have fared with a 6 contract max. Delow, the results are better. The trailing result outperforms. I mean, we could take a look at it on the UTA and I'll show you the difference. You'll do good with the fixed position and then build it up and then add 2 positions. But you'll miss all those runners, and those runners happen so frequently that I think you do want to trail instead. Just realize there will be some sessions where you won't get a runner, and you may end up just stopping out with 1 tick. And here's the thing, if the full target was reached with what would have been a fixed position, and you only got 1 tick with your runner, you're done for the day. You quit. You stick to the power of quitting as if you were trading that fixed position. Does that make sense? All right, so with wheat, we would not have hit our max yet. We would have only gotten to 4 contracts, not 6, since November 5th. But instead of the account growing from 12,000 to 16,600, you would have doubled your money from 12,000 to 24,000. Trading 1 to 5 minutes a day on average, sometimes a little longer, but that's what wheat has done. And how's the expectation table look? Not bad. Wheat puts you firmly in the yellow. Nothing wrong with that. That's pretty awesome. But it also points to heating oil. When you go back to heating oil and you see that it's some, firm, what was it, 2.0 was way down here, way over to here, firmly in the green. Right there is where heating oil was. Right here is where wheat is. Firmly in the yellow is extremely profitable. Firmly in the green, that's a treasure chest. That's something that you hide from your neighbors, from everybody. That's your goose that lays golden eggs, and you want to treat it well. I started with 12,000. I mean, if you put a bigger number in there, you probably would have traded up to 6 contracts by now. If you put a smaller number in there, you might have had to increase your risk. I mean, if you put 3% risk, just to show you the difference between 2% and 3%, 2% per position is 4% risk. So keep in mind, it's an aggressive approach. When you put 2% risk and you do 2 positions, with the UTA, you're really putting 4% because it's per position. So, but you're winning 80% of the time. Maybe you could justify slightly more risk. When you think of Chris Jesus Ferguson, put 5% risk on his poker tournaments, turn $1 into $20,000 with a 50% winning percentage. You start to think in those kind of terms. Maybe you could justify a slightly larger risk. This would be 6%. Let's go 2.5%. So that's a 5% total risk. I mean, it makes a huge difference. It really does. But you could also have deeper drawdowns, and you could bust out. You hit some bad luck. Well, if you have a smaller account, you have to probably increase your risk. And the odds of busting out go up. That's just, you're swimming in the world of trading, futures. If you're undercapitalized, it's not anyone's fault. It's just the situation that it is. Capitalization is a huge component to successful trading. It just is. There's no getting around it. So if you go in with small money, you have to take more risk, and you better face the reaper. More risk means exactly that. There's a higher chance that you're going to bust out. That's what risk means. But without risk, you can't have reward, so that's the trade-off. A lot of people know that intellectually, but they don't know it psychologically, and then they start screwing up their trades because of that whole human element that we talk so much about all the time. The thing is, you want to use tools like this that help you just treat your trading as a business and make real smart business decisions. So adding 0.5% more did trade up to 6 contracts. Got up to 29,000. Remember, the other one was 24,000. So the 0.5% risk more added $5,000 on the exact same trades. And 30% of the trades, 30.41% of the trades are making new equity highs. It's almost like 1 out of, 3.5 trades out of 10, you're making a new record profit level. Again, wrap your mind around that. That's just that's so powerful. You continually make new record profit levels. Just made a new equity high on from today's session. Today's session is an example of 1 out of 3.5 out of 10 trades making a new record profit level, because that's what just occurred right there. Yeah, crude oil looks pretty damn good, but you're right. It's not like this, but it looked better a month and a half ago, but it still looks good, and it will look better. Crude oil is going to come back with a vengeance. I guarantee it. I mean, I'd guarantee it, tongue in cheek. Don't take me literally. Can't do that. It's not legal. But crude oil, it's still at almost 65%. It's still made $1,940. It's in a little drawdown. But if you look at the equity curve, it just made new highs, and now it's right near its all-time record. All it needs is a good run, and it's going to, we're going to look back at this, and this number on the right is going to be 40,000 before too long. Hey, recession is, I guess it's like beauty being in the eye of the beholder. On the expectation chart, doesn't look nearly as good, but it still looks very good. I mean, it's deep in the yellow. Deep in the yellow is very profitable. It's not as deep as wheat. Clearly, it's nowhere near, not near the green. I suspect that we'll hit a winning streak or get a winning stretch. We'll break out to new profit levels on crude oil, and this is going to move over to here. Oops. This will move to here. Maybe it'll move to here. Down or to the right or down. It doesn't matter. But heating oil is going to end up being, in this little area here probably. This is where it's going to live. Maybe it'll even live here in this area. That's where crude oil is going to live. But that's, if it can get to here, that's pretty darn good. That's like 2 clicks away from green, 2 clicks over. So you're deep in the yellow, that's a money-making machine. You're deep in the green, all I could say is wow. I'll tell you another one that's deep in the green is, it's fewer trades, of course. Do I have it on here? This one. Euro yen. Holy smokes. This is just from the beginning of 2012, but I mean, look at that average win to average loss with that winning percentage. Oh my goodness. Just down and dirty. Is that deep in the green? Jeez. That's the kind of stuff you want to be focusing on. Will it stay there? It's hard to say. I mean, we got to see what happens over the next 2 years maybe, or, obviously it's swing trading with end of day. There's not a lot of trades, but wow. I mean, there's your equity curve. The story's still being told. And you get a lot of this. You get a lot of these types of charts, these types of production and with the end of day forex swing trades. A lot of them. The Euro US won't look very good. Looks totally different. But that's why you want to have a nice big combination of pairs so that they all kind of level themselves out. I don't know. I can't tell you how this tool has affected my own personal trading. Having the big picture vision, the forest from the trees, this is how you become that eagle I always talk about. So you make really smart decisions based on the business of your trading, not based on the transactions that are happening inside of your business, those little transactions where some of them are going to lose. Your decision making has to be from a higher point of view, and if you have a tool like this, you're going to arm yourself with what you need for that higher point of view. Make the decisions based on that. I mean, I was down in heating oil, and it would have been easy to just say, this session sucks, I quit for the day. And that would have been like the little grunt running around the forest trying to dodge trees. That's the decision from the low point of view where you don't want to be making decisions. A high point of view was to take the next trade because of the trade plan. We all know what the outcome ended up being. I didn't post the trades yet in the UTA. I haven't had time, so I'm not sure if we were positive or negative yet on heating oil for the session. But that last trade made a huge difference regardless. And there hasn't been another trade since. And here's a case where the filter again prevented a good trade. Right there. Or was it this one? 14. Yeah, it was this one. I mean, that's a good trade right there. Look how far away you are from the EMA. There's a good chance it's going to come up and meet it. But, sometimes you'll lose. But, you turn off the EMA filter and that trade shows up. There it is. SST Pro, well, I showed you SST Pro for half a second, Donald. For those of you who trade the SST, it's not a combo of SST and Trend Jumper. Are you referring to what? The UTA sheet? Well, every UTA sheet I showed you is just Trend Jumper and nothing else. No, that's not SST. That's just Trend Jumper. SST is nice with swing trading. It'll give you a different system, so you get some diversification with systems. But I personally prefer Trend Jumper to SST for swing trading forex. It's my personal preference. I think SST does great. It really does. But based on what I've seen with Trend Jumper, again, my own personality is if it ain't broke, don't fix it. Unless you can find something that's that's less broken or works better. And in my view, Trend Jumper, it's hard to beat it. It really is. It's hard to beat it with swing trading, end of day. It's so easy. You got the simplicity and the results, and it's just the common sense approach of jumping. And you're taking advantage of momentum on those jumps, and then you're right when you hit the apex of the move, you're coming off at the fixed target, but you still get the chance to pick up more. Yeah, they are amazing results. They really are. What's amazing to me is people returning the Trend Jumper want their money back. And every now and then I've been getting some emails where I'm like, are you kidding me? Do you realize what you're doing? That happens. Amazing. Let's see. My 2010-3-601. That's what I have. I don't know what the light version says. Crazy. It might say the same thing. The way you could tell if it's light or if it's pro is that when you open it up, you're going to have fixed fractional money management. The light does not have this. The light does not have the expectation table. So that you're going to know from that. It doesn't have the trade distribution tab. Okay, there's a few other things it doesn't have. But so if you don't have it, then you have the light version. If you paid and bought the pro version, you probably still have it somewhere. Bill, the filter is, by default, it's turned on. And so the TJ standard calc does not let you turn it on or off. It just keeps it on because that's the standard trend jumper strategy. And, you know, I'm showing you the good, but there's also the bad and also the ugly. And so we've looked at the good. But when you lose some of the good, you also avoid some of the bad, and you'll also avoid some ugly. So you get the benefit of the filter on the bad side also. You might miss some winners, but you also are going to avoid some losses, a lot of them. And so, you know, it helps you mitigate when the market's trading in choppy sideways action. That's where you run into problems, and that's where you really want the filter. So if you could recognize it for what it is, being an owner of the standard calculator puts you in a good position because it forces you to think through the trade. So let's just say you're a standard owner, you don't have the pro version, you're wondering, gee, I see the crossover, but I'm not getting a long trade because it's going against the EMA, but look at the distance between here and the EMA, odds are pretty good that's going to work. Well, you should know on a 20-tick bar that the target is 40 ticks. So look at the high of the bar. The high of the bar is at 32. Let me put this here so you can see it. 32. So go ahead and put this up to 42 and just make your own target with the horizontal line. I'm sorry, 52. Wait, you want to go 40 ticks up, so 72. Got to do the math right, of course. Put your target at 72. There. Now on a 2-tick breakout, get into the trade. Put a horizontal line, put one below, you know where your stop is, and voila, you have an instant calculator. You know, there's no mystery. It's really easy. And by having the standard calculator, it forces you to think through the trade. Remember, I had to do all this with no calculator. I was trading this for like nearly a year with no calculator whatsoever. I didn't really need it. The calculator helped me define my rules more clearly because, you know, maybe I had a little too much artsy-fartsy in the way I was doing it. You know, without the calculator, you could be a little looser. That isn't always bad if you're a good trader. It could be bad if you need more structure. That's where the calculator really helps with discipline. But the strategy is the identifier of the setup. What you do with it, that's what you do as a trader. The strategy does identify the setup here once you eliminate the filter based on the price being so far away, knowing that it's going to swing back and come back to its EMAs because that's what prices do. Yeah, crazy. You're right about that. 2010, you're going to lose some functionality. So I've talked about that till I'm blue in the face. Don't get 2010. Stay with the earlier version. Don't let them pry it away from you until your dying day. So, Bill, that's pretty easy, yeah? You don't need anything to take that trade. I'll tell you another little trick. All you have to do is set up your fib price retracement lines. Just snap, go to snap mode, and just draw them. You could have the numbers set up with the trend jumper formula inside the tool, and look at where 70 is the target. Isn't that where I told you the target was? It's 40 ticks above the high of the bar, 32. This puts it at 70. You know, you're pretty darn close. All right, guys. I gave you an extra hour. Thanks, Wout. I do accept Amazon gift cards. Haha. You guys tip your manicurist and your barber. Why not tip your trade room host? I could see Ron smiling and Will. We all accept Amazon gift cards. Haha. Hey, guess what, guys? I got a good little surprise for you. I have my old trade computer behind me running the trade room and recording this session. So maybe if I have time to go through 4 hours of content, I'll try to produce it and put it up on the website if you guys want to review any of this. Not exactly sure if and when I'll do it, but at least I got the recording going, so we'll see. Yeah, maybe I'll just go at the last hour, trade the heating oil trade in the UTA. All right, guys. So don't forget, hang out tomorrow. Be fun. Maybe we'll go through a little bit of this again, just because it's such a great topic. And I really appreciate your time and being here today. You guys have a great day, and I'll see you next time.